check this out. Okay. Landscape executive, how are you doing today? Well, now that's interesting. There you go. That works. All right, good evening, Darbinley. How are you today? Mike, how's it going there, Doc? I missed AVGO and Tesla calls. Malik, how are you today? Glad to hear it. Willie, how's it going? Ferdrum, Mr. Shine, all these interesting names. What do you guys think of when you come up with these names? I think it's pretty cool. Anyway, we're getting ready to get started. So, AVGO. Missed that one, huh? Well, sorry to hear that. Well, let's see what happened today with the stocks that we were looking at. Well, number one on the list today was Siri. So let's take a look at Siri. S-I-R-I. And for those of you who don't know, my name is James, and this is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable, consistent 1% per week. Now, I created this trading strategy for my 9-year-old daughter back in 2008. She jumped up on my lap, said, "Daddy, can you please teach me what you're doing?" Alrighty, so how do you teach a 9-year-old how to trade stocks? Well, here's the challenge that I had. Number one, love me some LMT. Ooh, LMT. We'll take a look at that one in a minute. So, creating a trading strategy for a 9-year-old little girl, well, it had to be simple, it had to be safe, it had to be predictable, consistent, and no way that she could lose. Okay, so that's my challenge. So I come up with 5 rules. Rule number 1, never buy something you don't understand. If you don't understand it, don't buy it. If you're going to buy it, make sure it is a stock or a company in which you are comfortable holding for the long term. That's rule number 1. Rule number 2, never sell at a loss. It kind of defeats the purpose. Okay? Just don't sell at a loss. Why would you do that? Rule number 3, make sure that the company is consistently profitable. I like to cheat and I like to go directly towards the dividends because the dividends are a portion of the corporation's profits which they give to the investors. So that's me. I buy stocks. I'm an investor. I want dividends or I want cash flow. So I like companies that have 20 years of increased dividends. That lets me know that the company's consistently profitable, they've been around for a while, and they're sharing more money with me every single year. That's rule number 3. Rule number 4, it is a must to have weekly options. Now, in order for me to get a weekly cash flow or a check every single week, I have to trade something. That trades on a weekly basis. Well, those are weekly options on stocks that have consistently increased their dividends for more than 20 years. That's 2 decades. Okay? And rule number 5, last but not least, make sure the numbers work. And what do I mean about the numbers? Well, here we go. The numbers. What was the last stock price? Okay, the last price of the day. What can I buy it for first thing tomorrow morning? $25.65. Okay, great. Now, if I'm going to sell a covered call against it, which, by the way, a covered call is the safest trading strategy there is. You buy a stock, you sell somebody the rights to buy it from you at a certain price by a certain day. Okay, that's simple, right? I like weekly options because it allows me to get a weekly cash flow every single week. Okay, every week a check from doing dividend I call it dividend capturing 2.0 because it's a little bit of a twist between dividend capturing and covered calls. And yeah, so it just kind of brings it all together. So the numbers again, this is what I can buy it for. Here's the closest strike price right there. Now, if I'm selling a covered call at this price here, what am I collecting? Well, I'm collecting 51 cents on a $25 stock. Well, that's over 1%. And that is what I'm looking for. A safe, predictable, consistent 1% per week. So 1% a week is what I'm looking for. Safe, predictable, consistent 1%. Okay, so that being said, let's get started. Let's take a look at Siri, S-I-R-I. Okay, Siri, here's the high, here's the low, here's where it was a year ago, here's where it is now. Now, if you see right down here, she's bouncing off this bottom right there, which means, you know, she goes up, she comes down, she goes up, she comes down, she goes up, she comes down. Well, now it's bouncing off of the bottom. This is the bottom of the year. Now, you're going to make most of your money in the stock market by buying low and selling high. We all know this, so we all do this. Buy low, sell high. It doesn't make any sense to buy it at the high and wait for it to go higher. Yeah, no, that doesn't really work. The Automatics. Automatics, how are you today? All right, that being said, let's keep on moving. So Siri, a year ago, opened up somewhere around 36, topped out at the end of the year at 57.88. The plug of stuff, that's an interesting name. 57.88 is the high of the year, and that was back in the middle of December of last year. The last 30 days, here we go, 30 days ago, we opened up at 31.90. Right here, see that? 31.90. And it was actually the 30-day high 30 days ago. And that high was 32.50. Okay, so 32.50. Then she goes sideways for a bit, makes a big drop, and here's our bottom, right down here, a double bottom. That double bottom just so happens to be on the 16th and the 17th, 27.66. All right, so from there we got 1, 2, 3, 4 days to the upside. Now, I personally like 2 days to the upside because that tells me that the stock is starting to move to the move up. Okay, great. 30-day high, drops to a 30-day bottom, bounces up and goes up. That's an invitation and a half for me. I jumped in on this thing because the numbers just work. 5 rules. Rule number 1. Yeah, that's not working out. Starting again. All right, so let me see if this works. Sorry, I got like 7 cameras going now. Interesting. Okay. Jim Hopler. Holy shit, I got 99 questions already and we're just getting started? Really? All right, LMT, Lockheed Martin. LMT. All right, I'm going to say no to Lockheed Martin. Reason being, it's at the high of the year at this moment in time. No. Please don't. Interesting. Okay, so let's see what we're looking at. A lot of these questions. Kohl's, user 747281030. Okay. Kohl's, KSS. Now, just to let you know, I do have some Kohl's. Let's check it out and see what we think. Here's our high. Here's our low. Here's where it was. Here's where it is. And here's the direction it's currently going. It's at $18.94 at the moment. So if I wanted to do Kohl's this week, I'm going to be buying at $18.95. Well, the closest strike price to $18.95 is going to be the 19. And the 19 is selling for 32 cents a share. Now, that's more than 1%, and that's what we're looking for. So ask myself the question, do I like Kohl's? And do I like Kohl's at this current price? Besides that, let's take a look at the chart and see if we have an idea of where we think it might be going in the next week or so. Because I want to buy on a Monday or Tuesday, and then I want to sell on a Friday. So I'm only looking for a 1% return. Okay. So a year ago, 2057. We got our bottom at 17.50. 57, and that was the beginning of October of last year. Okay, we got a high right here, and that was the 1st of April, 29.60. So from the high of 29.60, she drops, retrace, drops, retrace, drops, retrace, drops, up, down, up, down, up, down. You see the way it goes. That's all they do. They go up, they go down. The idea is to jump in when it's coming down from a high, and then you buy it on a low down here after it comes down. Not before, not during, but after. Last 30 days. Okay, 30 days ago, we're at 1950. Okay, a couple of days later, here's our high, 21.25. She drops, goes back up, drops again, comes back up, drops again, comes back up. Now she's dropping. So at the moment, we are looking for the new 30-day bottom, because the 30-day bottom was 3 weeks ago, or 2 weeks ago. But now it's today, because Kohl's actually dropped down a little bit lower. So at this present moment, then like I said, the purchase price, $18.95, the closest strike price is going to be the 19. And the 19 is currently selling for 32. Well, that's over 1%. That's what I like. Now, what does Kohl's normally do this time of year? For that, we take a look at the seasonality. Now, for those of you who don't know what seasonality is, well, it's basically spring, summer, winter, fall. Okay? Certain stocks move certain times a year. Why does Weight Watchers go up in the beginning of January? Why does Hershey's go up in the first week of February? Why do oil stocks go up in March and April? Why do certain stocks go up in the fourth quarter? Okay? Seasonality, winter, spring, summer, fall. Okay, if we can plan when a stock is going to move, okay, we have a couple of choices. There's known events, which is what we can plan for. You got the earnings reports, you got quarterly reports, you got dividends. What else you got? You get seasons. Okay, certain stocks move at a certain time of year. Okay, this one right here we're looking at is Kohl's. Well, is there any predictable movement? Well, here's one right here. She drops in the second quarter, and then she jumps up in the fourth quarter. Usually. Oh, for those of you who don't know, this is a seasonality chart. All the way over to the left is January 1st. All the way over to the right is December 31st. So what are we looking at? The blue line represents the movement for this year. Okay, this is the movement this year. This little blue dot right there, okay, the blue dot right there represents today. Okay, so what do I want to look at? I want to look at this area. The red line represents 10 years of movement. That's 2014, 2015, 16, 17, 18, all the way up to the last 10 years. That's the average movement. So this, where the blue dot is today, this is the area that I'm interested in. That's the next couple of weeks. Okay, so I want to click left, drag right, and this is the next couple of weeks. Look at Kohl's. Now, normally, she goes down this time of year. But we know this year is not like any other years. This year, we have a lot of weird stuff happening in the economy and in society. It's just weird this year. Okay. Let's get back to where we were. So I like Kohl's. However, I'm going to keep my eye on it during the week and wait for a new bottom. Now, I already have some Kohl's at 23.23, but I can always get some more to do a dollar cost average down, lower my price a little bit. Okay, so that was Kohl's. What else you guys want to take a look at? James, Two-Face, Oulet 1, Martin Vale, Aguilar Dino, Big D, Beauty Cars 5, Hugo Escobar, cool name. Fred Goodwin, how you doing, Fred? Malik, Brock, Frederick again, Fairly 2X, Log, George, Bryant, Remix, Big Boy Miners. Ooh, Charles wants to take a look at MDT. James, hope all is well. Look at Intel. Trev, we're going to take a look at Intel. And then we're going to take a look at MDT. INTC. Let's try it one more time. INTC. Intel. Always, always, always first thing I want to see. The high of the year, the low of the year. Where was it? Where is it? And what direction is it currently going? Okay, that's simple. That's easy. Great. Cardiology guy, how are you today? We're looking at Intel at this moment in time. Okay, let's move on over. The current price is $22.56. Okay, great. So what do the numbers look like? Hey, Trevor, give me a second. What do the numbers look like if I want to buy it tomorrow? If I wanted to incorporate this stock into my trading strategy? Well, the price is $22.47. Well, the closest strike price is going to be the $22.50. So if I buy the stock here at $22.47, I sell my rights through a covered call, $22.50, basically the same price I just paid for it, and I'm collecting 63 cents a share. That is more than 2.5%. Oh, I can live with 2.5%, can you? But here's the question. Do you like Intel? Remember rule number 1, never buy something you do not understand, and make sure you want to hold on to it for years, decades. But that's not our goal. Our goal is to collect a safe, predictable, consistent 1% per week. And the way to do that, buy it current market price, sell a covered call, okay? Sell a covered call for the same price you just paid for it, collect this premium as long as it's more than 1%, and then double check the chart to make sure it's the right time. Just because the numbers work doesn't mean it's the right time. So let's take a look at the chart. I want to look at 5 different charts. This is the first one. And then I want to look at 5 different things on the chart. High, low, where was it, where is it, and which direction is it going? Okay? So right now,
1% per week. So 1% a week is what I'm looking for. Safe, predictable.
okay, what I'm looking for is the high, the low, where was it a year ago, where is it, and what direction is it going? High, low, was, is, and direction. That's what I'm looking for. Okay, the second chart I want to look at is the 90-day chart. Well, that's right about here. What has it done over the last 3 months? Sideways, jumped up, dropped, sideways, and then now she's going back up again. That's the last 90 days. Well, let's zoom in a little bit closer to find out for the last 30 days. Now, the last 30 days, gives me an idea of which direction it is going. Well, at this moment in time, 30 days ago, we're at 2024. She jumps up here, drops down. Here's our 30-day bottom at 1850, shoots on up to 23. Okay, she pulled back a little bit today, but not really, because look, the bottom is higher. Okay, the top is high, lower, but the bottom's higher. So which direction is it going? Is it still going up? Well, it certainly looks that way if you like Intel. And that's a very big question. You gotta like Intel. Okay, if you want to invest in it, never buy something you don't understand. All right, so that's Intel. Charles wants to take a look at MDT, or Medtronics. MDT. Here we go, Medtronics. First thing, before we do anything else, high, low, where it was, where it is, and the direction. Looks like she's going sideways with a little bit of a bump up. Okay, see, channeling that way. Current price, $89.86. So I can buy the 90s, and the 90s are going for 42. So I'm saying no to Medtronics because the numbers just don't work. Sorry, I like Medtronics. Now, I usually do trade it, but not today. How do you sell it to someone? Sid, you don't. You sell it to the market maker. There's only one person you can buy from, and only one person you can sell it to. Sorry. This you consider as a trading platform. That's what it's called, a trading platform. All it is a doorway into the stock market. Okay? I go through Think or Swim, which goes through Charles Schwab. Is that Divine? Divine Solomon, how are you today? So I'm going through the doorway at Charles Schwab, okay? And you can go through the exact same doorway with E-Trade, with wait a minute, Just to Trade, Fidelity. I think Bank of America has their own trading platform. Robinhood, Webull, Acorn, all these companies. Adi, I don't do Forex. Sorry, dude, no currencies whatsoever. So as I'm saying, this is just a doorway into the stock market. Okay, when you're buying from the market maker. So whether or not you trade on Thinkorswim, with Charles Schwab, with Fidelity, with Acorn, with Robinhood, any one of those hundreds upon hundreds of trading platforms, you're all trading to the same guy. That's it. You're going to click a button, and once you click this button, it's going directly to Wall Street and say whether or not they're going to accept it or not. So you're not buying and selling from someone or to someone in particular. You're selling to the market maker. Now, each and every stock has its own market maker. Okay, the market maker, let's call him the store owner. So he owns the store. You come in and you say, hey, I want to buy some of this. Well, great. You hit that button there and it goes directly to right to Wall Street, to whoever the market maker is. And that's who you buy it from. So it's not anyone in particular. Like, I can't sell you my stocks. You've got to buy them and you've got to sell them through the market maker. Now, wherever you enter in, if you enter in through Robinhood, great. It's a trading platform. It's just a doorway to the stock market. This is Thinkorswim through Charles Schwab. Just a doorway into the stock market. Okay? MDT is going to be no. Charles, NTR. Charles, you got a lot thing. Give me one time. Give me a minute. NTR. Nutrien. Isn't Nutrien a no? I mean, didn't we look at this once before? Let's go and take a look at NTR and find out what kind of dividends do they pay, if any at all. Okay. Historic prices, dividends only. Oh, there's the dividends right there. Now I want to look at the maximum amount of dividends. How many dividends have they been paying? Yeah, this is going to be a hell no. Sorry, dude. NTR only has dividends as of 2018. So what is that, 6 years? Yeah, that doesn't work for me. So NUE, that's Nucor. Well, that has plenty. That much I do know. NUE. Nucor. Now, I know Nucor has plenty dividends because they're on my list. NTR, I don't know because they're not on my list. Now, you may be asking, where do I get my list from? Well, my list only consists of companies that have continuously increased their dividends for more than 20 consecutive years. That's 2 decades. Okay, you may be asking yourself, well, what about this? What about that? Well, you can invest your money in anything you want. That's you. Me personally, I only invest in companies that are consistently profitable. That means I have to be able to take a look either at their spreadsheets or at their, annual reports or their quarterly reports and see how the cash flow is looking, see how the bills are being paid. Those are the fundamentals. I can bypass all that and go straight to the dividends because the dividends is a portion of the profits paid directly to the investors. That's what I'm looking for. 20 years of increased dividends. Ooh. What the hell is that? I don't know what the hell that was. All right, so we're still looking at Nucor. High, low, where was it? Where is it? What direction is it going? Looks like she's bouncing off this 134 and going to the upside. Well, good. Well, what's the price right now? 147. So I can buy it at 148, and the 148 is going for 55 cents. Yeah, no thanks. Okay, 55 cents? Yeah, that doesn't work for me. Well, it could because it's 55 to 150. That's a big spread. Look at the 47s. Okay, so it should be for around 147. Look at the bid. 144, 148. That's a big spread, and they're not that big when the market is open. When the market's open, it's usually a 1 to a 3 cent average between the bid and the ask. Here, the bid and the ask is way out of whack. So if you really like this company, your best bet is to look at it first thing in the morning. Because first thing in the morning when the market opens, all these numbers are going to change. What we're looking at now are the very last numbers just as the market was closing. So as the market is closing, they take a snapshot of what's going on, and that's what they project. Okay, these numbers won't change until tomorrow morning when the market opens up. And then they'll all change. And then they'll keep changing all day long. EPTPR. Hello, James. Can I start with $1,000? Yep. What should I start with? That I cannot tell you. I know absolutely nothing about you. I do not want to say something and then you come back and say, well, that's not what I was thinking and that's blah, blah. No, I don't want to play that game. I know nothing about you. If you really want to talk to me, drop me your number. I will give you a call back. Now, if you don't think I'll call you back, just post in the chat right here. Hey, if James says he's going to call, does he actually call? I mean, go ahead, just for the fun of it. Put it up there and say, hey, anybody out there, does James actually call if I leave my number? Now, there's 27 scammers or imposters pretending to be me. So if you get a DM, an email, or anything, you don't know who it's from. But if you leave your phone number and I call you, you get to hear I sound the same on the phone as I do right here. Okay? All right. Let's keep on going. Did we finish up with No, we didn't even finish with Nucor. Okay, a year ago, 154.88. We topped off at the beginning of April, and that was 203. Okay, well, our bottom was last week. The 30-day bottom, or the bottom of the year, was last week. Check it out, at 132 or 133. Okay, she goes down, up, down, up, down, up, down, up. Well, looks like she's coming back down again right now. Let's zoom in a little bit closer. Patty Sealegs, I tried calling you today. You left me your number. I called, left you a message. Okay, I can't help it if I call and you don't answer the phone. But I did call you, Patty. All right, so here we are 30 days ago. 150. The high is 152. She drops all the way down here to 133, shoots up to here, pulls back. Looks like she's starting to pull back now. This is not something I would jump into because it's not that strong. And look where it is now. It is closer to the high than it is to the bottom. Yeah, it makes me a little queasy. Even though it is giving over 1%, I'm going to say no. Coach Delia, how are you? Johnny M. Manish Patel, how are you today? Chesties, Matthew Romeo, Rob X, Mr. Lunch Lady. That's interesting. Pony Pusher, Jack Trudeau. I don't know, I might want to change my name with that Trudeau. Sorry, dude. Corwin the Creator. At your service, Corwin. Anyway, let's keep on going. What else do you guys have for me? Nothing, nothing, nothing. You guys all just joining and saying hi. Uh-oh, we got interesting here. Uh-oh, Macy's. Oh, whoa, all these. AT&T, Dell. All right. Darbin Lee, how are you doing? FINDI, blah, blah, blah. Okay, yeah, sorry, dude, I don't do that one. All right, sorry, seriously, I don't do Forex, okay? I probably should get a big sign right up here. I don't do crypto, I don't do Forex, I don't do futures. That's a great idea. Or I can use it like this, I don't do Forex. Let's see, oh my goodness, yep, that's the one. That's funny. All right. Don't you think the zoom in can affect the way you see the bottom in the charts? Yeah, exactly. Here's the bottom right here. Okay, so if I'm looking at the 1 year chart, okay, can you really see what's going on today and yesterday? Okay, think about it. Can you see what's going on yesterday and today with the 1 year chart? No, you got to zoom in and you got to take a look at the last couple of weeks. Here it is, the last couple of weeks. Okay, currently Okay, she's down, she's up, now she's coming back down again. Sorry, I like Nucor, but just not this week. So I'm gonna put Nucor for 2 weeks from today. All right, there's 1 week, there's two, wait a minute, it's 1 week, that's 2 weeks. Nucor, N-U-E. N-U-E. Written down for 2 weeks from today. All right, so let's get back to where we currently are. All right. Here we go. Ooh, Grammy Liz. Grammy Liz wants to take a look at Dell. Kohl Beans, D-E-L-L. I love Dell. D-E-L-L. Now, first thing, as always, the high, the low, where was it, where is it, what direction is it going? That's what I want to see. Okay, Nelson. Neil Weston. I saw that. All right, that being said, the current number is 117.40. So the 118s are going for 174. That's over 1%. The 117s are going for 224. That's over 1%. Look at the 116s. Yeah, I would do the 116s or the 117s because I'm only looking for 1%. Okay, if I buy it at 117, sell it at 117, I'm collecting over 1%, and that works for me. Okay, 1%, safe, predictable, consistent, 1. All right, that being said, a year ago, here's our bottom at 63.37. Now, the top was like a little over 150% increase. Any chance you could take a look at Stryker? All right, James, you actually have to give me the ticker symbol for Stryker. Okay, because Stryker, I've never done it before. Doesn't sound like something I would do because if I've done it before, I would know what the stock symbol is. So you have no stock symbol, so I have no idea what it is we're looking at. Okay? So Dell, there we go, last 30 days. Here you go. 30 days ago, here's our opening right here, 112. Okay, 112, she drops down to 101.50. Then she shoots up to 120. Okay, so she's going from 101 to 120. That's a $19 increase. That's close to 20%. Well, at 20%, don't you think you're going to take profits? Well, there was profit taking on Friday. Today didn't really move very much. So it's not what I want to do anyway, because look where it is. 30-day bottom. Now our 30-day top was 2 days ago. Yeah, there's going to be profit taking before this thing comes all the way down. Not something I want to jump into. But I am going to write Dell down for 2 weeks. And it's already written down for 2 weeks. So we're going to take a look at that in 2 weeks from now. Sorry about that, Grammy Liz. All right, SIN wants to take a look at AT&T. AT&T is going to be a no. I can do that really quick. Not that I don't like it. I like AT&T. I really do. But look where it is. Here's the high of the year. She's pulled back to here. Not quite far enough for me because she still has all this room down here to go before I jump into it. If you like it, hey, that's up to you. Okay? Just doesn't look right. All right. R's and 29. Okay, R's and 29. Let's take a look at Devon Energy, DVN. DVN, here we go. High, low, where was it? Where is it? What direction is it going? Look at it bouncing off that bottom right there. I love a 30-day bottom. Okay, 30-day bottom means she's going to drop, bounce up, and go to the upside. Wasn't Dell just added to the S&P 500? Maybe that's the increase. Rob, don't know. Okay, now I grew up in the 60s and 70s. I don't really know that much about Devon Energy other than the fact that they pay pretty good dividends consistently, blah, blah, all that kind of nice neat stuff. Let's take a look at the numbers. 46.96 was a year ago today. The high of the year was 55.02, and that was back in the middle of April. From there, we have our bottom of the year. Not the 30-day period, not the 90-day period, but for the whole year. Here's the bottom right there, 9/11 at 39. Okay, she's right here at 45, drops, retrace, drops. Now she's going to the upside. Okay, I like Devon Energy. I like when it moves like that. Okay, now at this current moment in time, 41.25. Well, the 41s are going for 51. The 41.50s are going for 26. Okay, so neither one of them is giving me 1%. You might say, wait a second, it does look like it. No, it doesn't. Because if I buy it at 41.25 and I sell it at 41, well, I got to subtract 25 cents out of this. Now I'm at 26. That just doesn't work. The 41.50s are at 26. Yeah, there's no 1% here unless I wanted to go into next week. But then that's 2 weeks. I'm getting 1% for 2 weeks? No, that's still not even 1% a week. Okay? Sorry. User 74, 72, 81, hut, icon, hoodie, icon, no. Hoodie, no. Sorry. Okay. Icon. $2.18 and no dividends. Yeah, no. Stryker, STRY. Stryker Corporation, SYK. There you go. Yeah, Stryker's going to be a no. 2 reasons right off the top. She's too close to the high, over $300, and it's a monthly. No. Monthlies don't work for me. Just not enough money. Rob, yep, life gets in the way. Is life actually a stock symbol? Yeah, it is. But it's a no. Stride, STRIDE. Just in case you were wondering, Stride is LRN and it's a no. It's a monthly. Yeah, no thanks. Okay, so let's keep on looking. Look at Stryker, that's a no. So Slick Rick 85. No! Talking to Icon. There you go. Is anybody here? Nobody's here. Is there anybody in there? Just nod if you can hear me. Is there anybody home? How about Dow? D-A-D-O-W. Okay, Dow. D-A-D-O-W. Okay. Here's our high. Here's our low. Here's where it was. Here's where it is. Here's the direction it's currently going. 52.57. The 53's at 10 cents. Yeah, no thank you. The 52's are 43 cents. Yeah, no thank you. Sorry, dude. Is there anyone here? Nope. Common. There's no way I can trade without that type of loss talking. I don't lose. I think I had 2 or 3 losses this year on the 3 accounts that I share with you guys. Procter & Gamble. Didn't we look at Procter & Gamble today? Procter & Gamble. Yeah, that's going to be a no, only because look at where it is. Okay, a year ago, 142. Now it's way up here. Yeah, that's way too much profit. Now, don't get me wrong. You know, if you bought down here, now it's up here. Great, good for you. But if you don't take that profit, you're going to lose it because it's not a profit until you take it. That's number one. Number two, nobody ever went broke taking profits. All right, how's it going? It's going wonderfully. Arrow wants to take a look at Macy's. Ooh, Rob, Yum Brands? I like Yum Brands. Why UM? Now, interesting thing about Yum Brands, they used to be a dividend king, but they cut their dividends and they got tossed off the list, and it's going to be a no because it is a monthly and I don't do monthlies. LUMN. LUMN. Lumen, $7. Used to pay dividend, no longer. Sold, blah, blah, blah. Now over 7. Okay, cool beans, Jamin. Wow, Yum is a monthly. That's cool. Yeah. John Deere, DE. Who wanted to look at John Deere? R. Taylor. Okay, R. Taylor. Here we go. You ready? John Deere. Here's our high. Here's our low. Here's where we were a year ago. Here's where we are now. And here's the direction it's currently going. And before I even go any further, it's going to be a no. Because look at where it is. Okay, the last 60 days. She's at the high. Okay, I personally do not buy at the high because I'm waiting for it to go higher. It's never been higher. Okay, why would I want to buy at the high? All right. Sorry, Taylor. Where is S&P heading? Don't know. It's not one of the things I cover. How you doing, Brandon Schmidt? I'm doing great. Cassie, I called you today, Cassie. I did. You left me a number. I gave you a call. It went right to voicemail. I can't hear any sound. You're the first person to say that. Okay, but Bautista said it sounds good. Why? But I can. VGT. No crypto, Neil. None at all. I'm going to get a sign that says, no crypto, no Forex, only dividend stocks. People are nuts. Yes, they are, Neil. I'm going to agree with you. Okay, Orlando Rivera. Orlando Rivera. ¿Qué pasa, amigo? ¿Cómo está? What about WY? What the heck is WY? Yeah, that's a no. VGT. Vanguard. Sorry, dude, that's a no. All right. Slick Rick, we already looked at Dow. Granny Liz, we already looked at Dell. We already looked at Dow. Dow Chemicals, already looked at that. Dell. Okay, Granny, already looked at Dell. Oh, UPS, fine. I will assist my friends in robbing the local bank in Utah. Well, Icon, you have fun with that. UPS. Now, I don't want you guys to think that I'm ignoring anything you guys are writing, but it does take me a while. I had 7 cameras running a little while ago, but now I'm down to 6 because that one over there is being finicky. Okay, Slick Rick, it's like the 4th time I told you I looked at Dow. Thanks for the encouragement. All right, Icon, you have fun with that, dude. All right, UPS. Here we go. High, low, where was it? Where is it? What direction is it headed? That's for the year. Now, just because it's heading down for the year, that doesn't say where it's going for the last couple of weeks, because it looks like it's going sideways for the last couple of weeks. So let's zoom on in that and take a look. But before we do that, I want to make sure it's worth our while. If I'm buying it at $128.99, well, I'm going to be looking at the 129s. And the 129s are going from 99 cents to 113. Sorry, those numbers don't work for me. I like 1% or higher. Do you trade overseas stocks? Sorry, I don't. Okay, Just Drew. Have you considered taking a loan to do what you are doing now on a larger scale? If it's safe, why not? Well, Just Drew, yeah, I have, okay? I have no problem whatsoever borrowing as much money as they would lend me. The challenge is, how do they figure out how much to lend me? Do I walk in and say, hey, I want $5 million? How do I substantiate a loan of $5 million? I'm probably gonna have to stair-step my way up there. Borrow 100 grand, wait a little bit, borrow another 100 grand, wait a little bit, blah, blah, blah. But yeah, if you have any ideas, Drew, I'd be more than happy to chat with you. ASO. Now, didn't we take a look at ASO a while ago, and wasn't that a no? Okay. ASO, Academy Sports. ASO. I'm going directly to the dividends and see how well Academy Sports pays their dividends. Well, only 2 years worth of dividends, so sorry, Gary. When I invest my money, I want companies that are consistently profitable. How can you get any consistency in profitability only being 2 years? Okay, the first dividend they paid, 2022. Well, it's currently 2024. What was that, 2 years? Yeah, no thanks. I like 2 decades. David Johnson, CHRD. What the heck is CHRD? Ooh, Rob wants to take a look at Aflac. I like Aflac. AFL, Aflac. That's going to be a no. Sorry, Aflac, don't get me wrong. Aflac's a good company. They've been around for over 100 years, but they're currently at the high. I don't ever buy at the high. I buy at the low. See, look, it goes up, down, up, down, up, down, up, down, up, down, up, down. There's plenty of opportunities to buy and get a profit. especially when I'm only looking for a 1%. So she goes up, down, good. I want to buy it low. It goes up, down again. I want to buy it low. It goes up, down again. Same thing. So if I'm following the stocks consistently, which I am, I do it twice a day, okay, once in the morning with my morning trading group. I actually have a morning trading group that people come and trade along with me. Fairly 2X definitely calls no BS. Now, fairly 2X, let me explain to you why. Number one, out of everybody here, now take this for what it's worth, okay? I've been doing this every single night since the beginning of January, okay? On average, yeah, Neil, thank you. On average, between 10 and 20,000 people come through this site on every night, okay? On average, 10 to 20,000 come through every single night. And every single night, I get some, for lack of better words, weirdos, some that are single-mindedly focused, some that have no desire about the content whatsoever and just want to, see if they can get me all riled up and get me all frazzled, whatever, it is what it is. But there are, I'd like to say, a good amount of people that are sincere, that really want to learn. Okay, but this is not something that's for everyone. That's number one. Number two, it's not easy for someone to comprehend, especially when you go through your whole life and everyone's telling you, yeah, annual percentage return, annual percentage return. Yep, you get this per year, you get that per year. Listen, I think I want $1,000 car. Okay, please stop. Stay on track, please. Okay? So I have a lot of people coming in, and it's hard to figure out who's serious and who's not. Now, Grammy Liz, you asked me 5 times to take a look at Dell. I've already looked at Dell. I have no desire to look at it again, because even if I looked at it again, my thoughts and my opinions on Dell is not going to change. Dell is not a good fit for me this week. I will take a look at Dell in 2 weeks, because until 2 weeks, it's not feasible for me. So, that being said, I'm not quite sure if I should thank you for that fairly 2X or not, but yeah, I'm not here for the BS. I could really care less whether you're here to just, kick the tires. But if you're here, you're sincere, fine. I'll be more than happy to answer your questions and help you out. All right, so let's keep on going. CHRD. All right, let's finish up with Aflac first, okay? Aflac. Yeah, it's going to be a no. I already figured that one out. Next one, CHRD. David Johnson wants to take a look at CHRD. Even though I have no idea what it is, it's going to be a no. Anytime I say I have no idea what it is, well, it's usually a no, because this is a monthly. Now, let me explain. David, I'm not quite sure if you understand the difference between a weekly and a monthly. All right, so let's take a quick look. Now, if you didn't know, if you're on your phone, your iPad, or whatever, you probably can't see these little tiny numbers. That's why this screen behind me, this big, huge screen, is live on YouTube. There are actually some people here in the audience watching this on their big screen TV. All right, now, this is live on YouTube. Helps you to see these little tiny numbers. That's why I broadcast it on YouTube. The other reason why I broadcast it on YouTube on 2 different channels is, one, you see me standing in front of the screen. That's one channel. The other screen, the other channel is just the screen alone. That's it, just the screen. All right. That being said, David, I already take a look at CHRD. It's a no. It's a monthly. What do I mean by monthly? Do you see these little things right here? 18 October, 15 November, 20 December, 17 January. Those are months. Those aren't weeks. Okay, let's look at AT&T. 27 September. That's this Friday. 4 October. That's next Friday. 11 October. That's 2 Fridays away. 18 October. 3 Fridays away. So on and so forth. Every 7 days. That allows me to get a weekly cash flow. Okay, number one, I pick a good stock. CHRD is not it. Sorry, dude. Okay, Granny, I've already said Dell is not a good fit. Just throw Wall Street borrows billions. Kush pays the bills. Okay, Drew, Wall Street borrows billions of yen at zero interest all the time and trade it in equities. Well, that would be nice, but I'm not in the situation to borrow billions in yens. Energy transfer. Okay, user 37 61 36 60 77 566. What the hell were your parents smoking when they named you? Trudeau. Micah thought that funny. Yeah, I changed my name from Trudeau. All right. Anyway, let's take a look at energy transfer. Now, I do like energy transfer. Okay. However, it's not the right time for energy transfer. Carter's, continue to explain your strategy. Uh-oh. What did he have to say? I like when someone has something good to say. Okay, Carter's. Okay, Coders, continue on explain your strategy. Why monthly and weekly and not daily trading? Oh, definitely sounds like somebody in their 20s or 30s. Did you hear what I said? Definitely sounds like somebody in their... Oh, look at this. That's cool. Definitely sounds like somebody in their 20s and 30s because you want to sit in front of a computer and make money that way. Great, fine, dandy, nothing wrong with it. You know, bless you on it. You know, best of luck. I don't want to sit in front of my computer. Okay, I don't. At some point in time, okay, this is for everyone. At some point in time, you are going to retire. You have 3 opportunities. One, you can age out, which means you're 65, 68, whatever they change it to nowadays. Okay? And then they're going to say, you're too old, you need to retire. It means you're forced to retire. It means you age out. Okay? You age out. You get too old to work, they send your ass home. Okay, great. The second way is you walk out. Okay? Walk out. That means you have accumulated enough money in your investments that pays you enough to cover all your monthly bills. That's aging out. I mean, that's walking out because you got that money. Okay, that's where I was. I had enough money set aside that I can cover my bills by getting 1% a week. Now, third way of retiring is toe tag. Do you know what that means? A lot of you know what it means. Some of you don't. Toe tag means you die on the job, all the way to the job, all the way home from the job. Okay? You don't get to enjoy your retirement. That means you die before you can enjoy your golden years. Okay, fine. You have to choose. You have to choose how do you want to do it. Okay? At some point in time, all your money has to work in order for you to live comfortably. And however you choose to live comfortably is going to dictate how much money you need coming in on a steady basis. So to answer your question, why not monthly? Why weekly, not daily? Because I don't want to sit in front of the computer all day. Okay, I've done that in my early 20s and 30s. I sat in front of the computer. Yeah, I tried Forex. I tried day trading. I tried futures. I tried a lot of stuff. This, to me, is the simplest and easiest. Okay, 5 or 10 minutes a day, I'm done and over with. I get my 1%. That takes care of all my bills. At some point in your life, this goes for all of you, money will lose its value. You will no longer be pursuing money. Okay, you'll be pursuing things that actually matter, like time with family, okay, time with friends, time alone, time to watch a sunset, time to watch a sunrise, time to watch the birds flittering in the tree, whatever you want to do. I do not want to sit in front of the computer. That's it. 10 or 15 minutes a morning, okay, every day, Monday, Tuesday, Wednesday, Thursday, and Friday at 3. That's what I've been doing for the past 15 years. It's just another ritual. You get up, you brush your teeth. You get up, you go to the bathroom. You get up, you take a shower. It's just another ritual. Okay, grab the newspaper, sit down, read the paper, do whatever you want. Me, I get up, do my morning ritual, and then I go to my computer, see where my positions are, especially when the market opens, so I can see where it's going, where it's been, those kind of things. Don't you think Zoom in? Where you did that one? Micah, how are you doing? Energy transfer. We're on energy transfer right now, right? Yeah, energy transfer is going to be a no. Okay, look where it is. The high of the year. Sorry, if you had bought Energy Transfer weeks ago or months ago, you would have made your money. Okay, but me, I like to jump in, jump out. I don't want to hold anything. Gee, lost your money on Nvidia puts. That's your own damn fault, dude. Nvidia has 1 cent dividend. Did you hear that, G? 1 penny dividend. So a couple of months ago, it was like $1,200 a share, and it was 4 cents dividend. Well, now they did the what do you call it, 10 to 1? They did a 10 to 1 split, and now it's a 1 cent dividend. Okay, the book value on Nvidia is $2 a share. Yeah, Nvidia, the numbers just don't work, don't make sense. Okay, Evergas. Evergas? Evargas. I don't know how you pronounce it. Why are you not a fan of puts? Because puts are obligatory. Do you like that word? Obligatory. Rick, so you never sell calls just for the current week. If so, when do you start looking the following week? Okay, Monday. Okay, I buy the stocks on Monday. I sell the covered calls as soon as I buy them. Okay, so at 9:30 a.m., I'm buying my positions. At 9:31, I'm selling my covered calls. Because 80% of all options expire worthless. So I don't want to be an option buyer because only 20% of those actually have any value at date of expiration. So I want to be an option seller, and I want it to go to zero. Okay, I want to sell it for whatever it's going for. Right now, 1628, the 1650s are going, the 16s are going for 28. So I want to sell it for 28 cents and have that 28 cents go to zero by Friday. Then I'll roll into next week, gets a little bit more money. Jerry Beard, I lost most of my money too, Jerry. So you only trade on Mondays? No, you weren't listening, Rob. Okay, I do most of my trading on Monday and Tuesday. Okay, Monday I do most of my trading because that's the highest value I'm going to get with an option because they all expire on Friday. So if all my money is tied up from Monday to Friday, okay, that gives me 5 days of time value, or they call it theta decay. Okay, one of the Greeks. All right, so no, I don't do that. Jerry Beard, you want to take a look at Jerry, dude? I'm terribly sorry, man. I'm in the same boat you are. I have Walgreens too, WBA, and we were kind of hoping, and praying that this was the 30-day bottom. Okay, she went up, pulled back, up, pulled back. Now we're here. Okay, our 30-day bottom was here. Now this new run to the downside could be it. We don't know. We'll just have to keep our eyes on it. Now, I have some of it also. Coders, you got it. Do you use volume analysis and exit a trade? Is it reliable? Blah, blah, blah. Okay, no, I don't use volume anything. Okay, remember, Coder, I'm not quite sure if you were here for this, but this trading strategy was created for a 9-year-old. When my daughter was 9, she jumped up on my lap and said, Daddy, can you teach me what you're doing? I said, sure. So I had a very interesting time trying to find a trading strategy specifically for her. It had to be simple, safe, predictable, consistent, in no way that she could lose. Okay, that's the 5 criteria I had to overcome. So the trading strategy came with 5 rules, and they were simple rules. They really were. Never buy something you don't understand. Never sell at a loss. Okay, make sure the company's consistently profitable. Weekly options are a must, and then double check the numbers. The numbers, what am I buying it for? What am I selling it for? What am I collecting as a premium? Is that more than 1%? Great. Now, is it the right time to buy? Well, no. 1, 2, 3, 4, 5, 6. 6 down days in a row. Hell no. I don't want to buy until it finds the bottom, turns around, and goes back up again. And I like 2 days to the upside once a 30-day bottom is established. Okay, so Evergas, the reason why I'm not a fan of puts is they're obligatory, which means if I sell a put, that means if the stock goes down, I am required by law to fulfill that contract. Okay? Now, if I buy a put, well, that forces someone else to buy it at a certain price. Obligated. Okay, with a call option, it's the right, not the obligation. That means I can if I want. I don't have to if I don't want to. Big difference. So when teaching a 9-year-old, it has to be simple. Okay, these are the stocks we're looking at this week. These stocks and only these stocks. Let me show you where I get that list from. Okay, so I go through all the stocks. Now, as we're speaking, there are currently 9,660 some odd stocks available at the moment. That's 9,600. That's 9,000. That's a lot of companies to go through. So how do you decide which one? You can't flip a coin to find out 9,600 different opportunities. So I only like stocks that share their profits. How come you didn't like the gap up and down plays? VE, I have no idea what you're talking about that moment. Okay? I don't. I love gap ups and I love gap downs. It all depends on where they are. Right? So as I was saying, what was I saying? If you didn't guess by now, I do have a Dell's ADD, which means I lose track of where I am quite often. It is. It's funny. All right. So that being said, why am I not a fan of puts? When I wanted to teach my 9-year-old, it has to be simple, and puts are not simple. It's okay, me too. Yeah. Hey, we're in the same boat. Oh, which boat? Where did we park? Holy shit. Yeah. I feel your pain, brother. All right. Anyway, lost all my money in Nvidia puts. You shouldn't have been playing with Nvidia anyway, in my humble opinion. You can see a larger screen on YouTube. Yep. Lost all my money too. Jerry, we had a conversation about this. I know you said you were nervous about Walgreens. And I said, hey, I'm in the exact same boat. I refuse to sell at a loss. Walgreens has 8,600 stores. 8,600 stores. And they own a bunch of stuff other than just the stores. They've also been in business for over 170 years. Hollywood's here. Woohoo! Hollywood! What's happening? Tom Powell. He just passed over me looking for UPS. Did I really? Tom Powell, I'm sorry, I didn't see that. All right, Luis, Johnson & Johnson. I don't like looking at Johnson & Johnson because it always has crappy premiums. Now, I have the calendar up here for a reason. Okay, this is the calendar. These little green dots represents certain companies on my list. Now, I have about 8 or 9 different lists, each one representing something different. Let me quickly show you so you understand a little bit better. Okay, here's my list right here. Okay, I got a list of companies that are over 100 years old. Okay, 100-year-old companies. Okay, makes sense. Calendar spreads, a trading strategy I don't teach here. Dividend aristocrats. Okay, I think this Walgreens will be bought by more insured someday. Okay, you never know. Seriously, you never know. Dividend aristocrats, dividend champions, dividend contenders, dividend kings, Warren Buffett's list. And this list, I call my old list. This is the list I've been working on for the past 20 years. Major insurer. Yeah, I get that. Okay? But we don't know. Okay, right now, Walgreens is in a little bit of a pickle because they have so much theft going on because the current administration does not want to prosecute. They don't want all their voters being stuck behind jail. That's just my opinion. Okay? Okay? You steal something, you get a slap on the wrist, and there's no prosecution whatsoever. Why? I don't know. Ask the legislature. They don't want to prosecute anything under $900. What's the world coming to? But don't get me started on politics. I don't do that. All right, so Tom Powell, we already looked at UPS. Okay, now I already looked at UPS, can't help you out. Sin, so when you say, I won't jump into you mean you won't buy it. Yeah, I won't jump into something. I won't buy it unless everything is in order. Because as I was saying, there's 9,660 some odd different companies to choose from. I only like those that are consistently profitable. Okay, which means I have to go and take a look at all of the annual reports. look at the consistency of the profit margins. Take a look at the consistency. How about EOG? What the heck is EOG? EOG. I don't know. So consistently profitable. So I go straight to the dividends because the dividend is a portion of the profits that's paid directly to the investors. Okay? Ooh, look at this. I got another, what does that look like? A flat tomato or something like that. How long do you keep the stock before you trade it? Sin, that's an interesting question. In a perfect world, I'd hold it for 4 days, 5 days max. Jump in on Monday, be out by Friday, all cash again on Monday again. Do the same thing over and over again. I have no desired time length for holding on to anything. Okay, I've been trading for over 20 years. The longest I've held on to anything was 9 months. And that was Kimberly Clark. And I didn't do it because I wanted to. The stock dropped. And it took 9 months for it to drop, turn around, come back up, and for me to be in the profit again. Okay, I refuse to take a loss because it defeats the purpose. Because most people buy stocks to hold for years, decades even. Okay, I was chatting with a gentleman, he bought stocks that, he has stocks that he bought 30 years ago and he still has them. And I'm thinking to myself, why? They go up, they go down, they go up, they go down, they go up, they go down. Why not, when they go up, sell it? When they go down, buy it again. You like the stock, so why not just trade it? If it goes up, sell it. If it goes down, buy it. I look at the same stocks every single week, week after week after week. I know when Macy's is going to be up, I'm going to sell it. And when Macy's is down, I'm going to buy it. Same thing with Texas Instruments. Same thing with ExxonMobil. Same thing with Chevron. Same thing with Johnson & Johnson, Home Depot, Lowe's. All those companies. Almost every single company I invest in, you probably heard of. Okay, take a look at this. Signature Tools, Toll Brothers, J.P. Morgan, Campbell Soup, Comcast, USB, U.S. Bancorp, Alley Bank, The Gap, Delta Airlines, Verizon, we already talked about Lowe's, CVS, and this is just for the month of October. That was one of my lists. You probably heard of every single one of those. Probably. So why would you invest in a company that's not consistently profitable? That boggles my mind. Sometimes, like SNAX. What the hell is SANX? I've never heard of it. Now, I grew up in the 60s, 70s, and 80s. So let's take a look. What the heck is SANX? SNAX. Strive Food Incorporated has no options. So, terribly sorry, that's just a no. Okay, if it has no options, why am I looking at it? I'm not looking for capital appreciation. Is the calendar something that you created, or is it out there somewhere that we can get at? Okay, the calendar, the calendar is on Thinkorswim. Everything you see that I'm showing you, except for Yahoo Finance, is available on Thinkorswim. Everything. Okay, I don't go from Thinkorswim to look for anything other than the dividend increases on Yahoo Finance. Like, do they have dividends? Okay, are they consistent with their increases? That's the only thing I use Yahoo Finance for. Other than that, I use Thinkorswim for everything. All right, we already looked at Dow. No. SNAX. No. Luis, we already looked at Johnson & Johnson. Slick Rick, I already looked at Dow. Luis, thank you. Ooh, Full Monty, AbbVie. I like AbbVie. ABBV. Just in case you were wondering, AbbVie is a dividend king. They have been in business for almost 100 years, and they have increased their dividends for more than 5 decades. That's 50 years. Okay, some of you out here haven't even been alive for 50 years, and this company has increased their dividends every single year for more than 50 years. All right. Too close to the high for me. It's going to be a no, not even worth looking at. Sorry. Bryce, CFR. I can tell you no right now because I've looked at it before. Okay, CFR, no. No, I don't do crypto at all. No crypto. Sorry. Until it becomes available to buy coffee or gas or pay my bills, it's going to be a no. And I like the idea of cryptocurrency. I really do. Something that the government doesn't stick their greedy little fingers into. It ain't none of them business where I pay my money and where I get my money from. None of their business at all. Okay? So why do they need to monitor it? And don't give me that what do you call it? Fraud and embezzlement and laundering bullshit. Don't. Because you take a look at some of the bills that they passed, where the hell the money went. Nobody has any idea where the money went that the government has. So why do they care where my money goes? Has C run up too much lately? Rob, let's take a look at C, because I actually like C. Citigroup. Here we go. Ah, damn it. Take a look at that. Okay. 30 days ago, way up here, she drops, retraces. What do you think's coming next? She's going to drop again. That's all stocks do. They go up, they go down. They do not come to your house. They do not make your bed. They do not fold your laundry. They don't even mow the lawn. Seriously, they don't. They go up, they go down. That's it. Okay? Up, down, up, down. That's all they do. So next week, I'm going to say 2 weeks for Citigroup. Okay, I want to give it time for it to drop. Okay, so if you look at the average movement, look from here, 1 week, 2 weeks. So here, 1 week, 2 weeks. That just gives me a rough idea. It's not guaranteed by any way, shape, or form. Uncle Sam is greedy. Uncle Sam's a dick. It just blurted out. Sorry. C. So I'm going to look at C in 2 weeks, and hopefully she's pulled back a little bit. Oh, McKesson. Is it MCK? Is that right? MCK? McKesson, I was right. All right, McKesson. Ooh, this is going to be a tough one. Okay? High, low, where was it? Where is it? What direction is it going? Look at this. She gaps down, big drop, big drop. Yeah, makes me a little iffy on that one, Luis. But let's take a look at it, all right? 506. Well, the 505 is going for 5. The 507 is going for 3. So the 506 is somewhere in between. Okay, and that's going to be a no. Okay, sorry. Because it's just not, well, number one, it's $500. I don't know what makes you think I can afford a $500 stock, let alone, a couple of hundred of them. Okay, Santiago Sosa. Spotify is not 20 years old, dude. Sorry. Hollywood wants to take a look at the Gap. Didn't we look at the Gap earlier? I think we looked at the Gap this morning. Okay. High, low, where was it? Where is it? What direction is he going? Okay, fine. Currently, we're sitting at 2029. The 2050s are going for 29, which is over 1%. Okay, that works. Okay, the 20s are going for 55. Well, that works too. So you get the 20s and the 2050s both giving you over 1%. Wonderful. Let's take a look at the numbers. A year ago was the bottom at 966. Now we topped off the year at 3075, and that was back in the beginning of June. Okay, she drops, retraces, drops again. Last 30 days. Okay, check out the last 30 days. 30 days ago, the high at 2550. We dropped all the way down to 19 and a quarter. Back up, back down, back up, back down. We're kind of going sideways for the last week and a half, the last 2 weeks. No real direction here. But what does a stock normally do this time of year? Normally this time of year, okay, the stock has a tendency, you see where it is? There's the blue dot. This is today. This is 10-year average movement. This time of year she goes down right to the end of September. In October she jumps up, and then towards the middle of October she drops down again. Sorry, Hollywood. Here we go. All right, so let's move this over. Move it on over. All right, Tom Powell, I don't know what you've been paying attention or not, but I already did UPS. UPS. We already did it. Okay? But we'll take a look at it again, just to refresh your memory. All right, so currently, high, low, where was it, where is it, what direction it's going? It's going sideways. Currently the price is at 128.99. The 129s are going for 99 cents. Okay? I said no to UPS earlier because the numbers just don't work. Why would I buy it at 129 and the 129 is only going for $1? That's not 1%. MRK, we already looked at, wait a minute, MRK is Merck. MRK. MRK. Okay, so MRK, well, what the hell did you do? MRK, here's our high, here's our low, here's where it was, here's where it is, here's the direction it's going. 116.75, the 117s are going for 35 cents. Hell no. Sorry, we already did the Gap, we already did UPS, we already looked at McKesson. Slick Rick, my thoughts. Okay, Crocman, Intel, we already looked at Intel. Intel's great, however, I don't do Tesla. Tesla does not have dividends. Okay, Sabre OD, the Qs, yeah, no thank you. Okay, if you actually knew what the Qs were offering, you probably wouldn't do them either. Okay, so just in case you didn't know, let me share this with you. Q, Q, Q. Here you go. Here's your Qs. Are you ready? Now, currently the Qs are at $4.83 a share. $4.83. See that? Pepsi seems to be a weekly floor. Any thoughts? Yeah, Pepsi, the premiums are usually crap. So let's finish taking a look at the Qs for Mr. Sabre OD. Okay. So the maximum amount cube. Oh, CVX. Somebody wants to take a look at CVX. CVX. That's Chevron. Okay, so let's take the Qs all the way back to 2000, because I know they go back further than that. Okay, 2003. Okay, here's one of the things I don't like about the Qs. Are you ready? In 03, it was 1 penny. 04, 38 cents. Well, that's a nice jump up. 05, 4 cents. Explain to me how you go from 38 cents a share to 4 cents a share, and you think that's a good place. Okay, not done yet. 05, 10 cents. 06, 3. 3, 5, 3, 4, 5, 3, 3, 3. 4, 5, 4, 7, 5, 9, 11, 8, 12, 10, 16, 15, 11, 14, 20, 37, 16, 22. Do you see it goes up, it goes down, it goes up, it goes down, it goes up, it goes down. This is the profitability we're talking about. Okay, so if you're in a corporation, X amount, whatever X amount is, that goes directly to the shareholders. If that price of that amount of money increases and decreases, goes up and goes down, doesn't consistently increase, yeah, no thank you. That's one. That's one reason. The inconsistency on the dividends that it's paying. Yeah, no thank you. But hold that thought, because it gets worse. Okay, let's look at the summary for the Qs. Do you see that number right there? Okay, that is the yield. The yield is whatever you invest. Okay, whatever your investment is, and at this moment in time, it's $4.81 a share. Okay, whatever your investment is, you take all the dividends that they pay out you per year, and you divide that by the purchase price. That will give you your rate of return, your yield. Okay, the Qs are giving 0.61%. That's not even 1%. That's a little bit more than 0.5% for the year. Okay, are you honestly going to put your money into something that pays less than a little bit more than 0.5% per year? So that means for every $100 you put in, you get 50 cents. Well, that's a half. You get 60 cents. For every $100, you get 60 cents. How long is it going to take you double your money at 0.6% per year? For that, you do the rule of 72. You take 72 and you divide it by the interest rate. Okay, 0.6. Or wait, 0.06. Yeah, 0.061. Yeah, no thank you. Anyway, no to the Q's. Tom Powell wants to take a look at Target. TGT, Target. Hey, Target, here's our high, here's our low. Here's where it was, here's where it is, here's the direction it's currently going. Okay? Now, let's take a look at the numbers. Right now, it is at 155.50. So the 155s are going for 178. Well, that is more than 1%. I like more than 1%. Honey Badger, thank you for that. We're going to take a look at Advanced Auto Parts in a minute. Give me a second or two. Let me finish up with Target. Okay, now Target, if you know or you don't know, it's over 100 years old. It is a dividend king. That means they have increased their dividends every single year for more than 5 decades. That's 50 consecutive years increase. That's higher and higher and higher. It's not like the Q's, up, down, up, down, up, down. No. Okay, the dividend kings, the dividend payments to the shareholders is consistently to the upside. That's it. No pullback. You pull back once and you get tossed off the list. No company wants to spend 50 years building up something to be tossed off, in my humble opinion. All right, so that was Target. Wait a second, last 30 days for Target. Here we go, zoom on in. There you go, last 30 days. I'm going to say no to Target only because look at the chart. Hey, Bama Redneck, woohoo, thank you for that. We got a potato, what's that, tomato on my head? All right, 30 days ago, we're at 162. We drop all the way down to 144, shoot back up to 158. Now she's coming back down again. So Target, I'm going to say thank you, but I'll see you in a couple of weeks. Target. It's not on my list yet, but now it is. TGT. All right. Now, for you guys that have noticed, yeah, I write stuff down. So anything on this list, I wrote down 2 weeks ago. All right? So this is for next week, and this is for 2 weeks, and this is for 3 weeks. This is how I do my lists here at night. But this is basically what you guys have me look at. Look at that. That's 1 week. That's all that crap. Anyway. Advanced Auto Parts. Let's take a gander. AAP. Advanced Auto Parts. Ouch. It looked good yesterday. Anyway, a year ago, high, low, where was it? Where is it? What direction is it going? Right? Currently, we're at $40.85. The 41 is paying 63. That's over 1.5%. I like those numbers. Great. Well, the numbers work. Let's check out the chart and see if the chart is telling us it's the right time to buy. All right. A year ago, we were at 56.96. We got a high back at the end of March at 88.68. From 88.68, it's a slow decline to right here, where she gaps down and then keeps dropping. All right. Well, what does that look like? Here's the last 30 days. So now we looked at this morning in our morning trading group. A little disappointing, but here's our 30-day high 30 days ago. And then she drops all the way down to the 11th. Okay? Then you have 1, 2, 3, 4, 5, 6 days to the upside, 3 days to the downside. Now we're sitting at 40.50. It's just going to be a no, and we will keep our eye on it for the next week or two. Because as soon as she finds that new bottom, turns around, goes to the upside, I like Advanced Auto Parts. I'll buy it then. Okay, I'll wait for it to find this bottom, probably sometime this week or next week, and then I'll jump into it as long as these numbers work. Okay. Next, Honey Badger, thank you for that. All right. When you sell an option and it goes down, do you sell it again at the same strike price the next week? User 2761, blah, 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 whatever. It's all about the numbers, okay? Now, you're asking me a question that I usually reserve for a Friday afternoon, because what I buy it for on Monday or Tuesday is just my entry point. What happens on Tuesday, Wednesday, Thursday, well, that's got something to do with what happens on Friday. But if the stock goes down, I'm not going to sell it at a loss. I will lower my strike price low enough so I'll still get some kind of cash flow, but not too low where I run the risk of being called out. Okay? How do you mitigate the downside risk? Twisted Philly, how are you? All right, Twisted Philly, how do I mitigate the downside risk? I can't. You have no control over any of that. Okay, it goes down, it goes down. It goes up, it goes up. We have no control over those things. I missed a lot of these questions. Wow. I watch YouTube and listen to TikTok. There's a lag between it gives me time to study where you're going. All right, cool, that works. Simone is here. Hi, Simone. How are you? All right, so let's keep on going. Frank, any tips on your dividend capturing strategy? Frank, thank you on that. Dividend capturing is a trading strategy. It's been around for over 400 years. Okay, you buy a stock, you collect a dividend. You sell it for a profit, and then you buy another stock, collect a dividend, sell it for a profit, buy another stock, collect a dividend, sell it for profit. Does it work all the time? No. You have to buy the right stock at the right time. What is support of gold now? Sorry, I don't do gold. Sorry, not even on my list. Sorry about that. My ginger tea and honey is supposed to be good for my throat. I'm not used to talking so much. So talking 3 hours a day kind of gets to your voice. All right, so tips on dividend capturing. Dividend capturing, you say, me boy. Okay. Now, Frank, you ready? There's 4 dates to remember when it comes to dividend stocks. Date number 1 is the announcement date. That's when they tell people what they're doing. Date number 2 is the EX dividend date. You can tell it right down here. Okay, see it? Stock symbol, the dividend announcement date, EX dividend date. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Blue cars. I tipped away $100 at Twin Peaks today. No, it's an excellent investment. If you have the ability to, sure. Waiters and waitresses are usually underpaid. Usually. And underappreciated. I was a waiter for years. All right. Date number 4 is the payment date. So if you really want to do dividend capturing, what's very important for you to understand, number 1, the EX dividend date and the date of record. Years ago, they used to be different. Well, now they're the same. So the little green dots. If you want a dividend on JCI, you got to buy the stock before the 25th. Okay? Now, so you could buy it on the 24th, the 17th, the 11th, the 2nd, the 5th, whatever. As long as it is before the EX dividend date. All right, so we're looking at JCI on the 25th. So what I like to do, Frank, is 2 weeks before the EX date on a Monday, the 9th. So let's take a look at JCI on the 9th. Okay, because JCI is paying a 37-cent dividend. JCI. We want to go to the 9th. Okay, there's no explanation there. You buy it at the opening of day. Okay, you add the dividend into it, and that's your exit target. But look, for the past 2 weeks, nothing but up. So that's not a really good example because that one went in the right direction. So the idea is pick a good company, one that you'd like to have. Buy the stock, however many you can afford. 10 days, 2 weeks before the EX date on a Monday. GE, look at the same thing on GE. So GE had a 28-cent dividend. GE on the 9th. Same thing. The 9th, look at the run-up. Uh-oh, I missed that question. I missed a couple questions, so let me check them out. Sorry if this is a stupid question, but does your method earn more returns than Spider ETF? I'm going to say yes. Okay, I get an average of 1% a week. 1% a week is a 62% annual percentage rate compounded. Okay, I just say 50% because it's a lot easier. 62 sounds a little unrealistic. Well, 50% sounds unrealistic. When have you seen anything offer more than 15 or 20%? Hardly ever. But this can get you 1% a week, and that's over 50% per year. All right, Frank, does that make sense? I hope it does. Okay, always keep an eye on, the easy way of doing it, Frank, is right here. Okay, AAP, here we go. Now, we want to take a look at historical data. Okay, historical data. Now, this is Advanced Auto Parts. Frank, you watching this? This is Yahoo Finance. Come to Yahoo Finance. You come over to historical data, and you want to look at the historical prices. Okay, where's the dividend? Here's a dividend right there. You see it? 25-cent dividend on the 12th of July. So 10 days. All right, 2, 4, 6, 8, 10. The opening up price of the day is $62.86. So we add the 25 cents onto there. Then we're looking at $63.01. That's my new target, my new exit. Because if you buy it at the opening of the day, regardless of what's happening at the opening of the day, well, here's the opening of the day. You add the dividend to it, okay, $62.58. You add the 25 cents, now you're looking at $61.01, okay? Sorry, $63.01, is that right? Okay, so $62.86 plus 25 is $63.01. Well, the high of the day is $63.46. So you're out on the very same day. If not, well, you're definitely out on the 12th, which is the same day as the dividend date. Okay, buy it at the opening price 2 weeks before the EX date on a Monday, because that will allow you to do covered calls if you feel the need. Now, I found that covered calls has a better rate of return than dividend capturing. But if you don't have enough money to do covered calls, then yeah, just go right back to dividend capturing until you get enough money. I'm a big fan of PHK. PHK. Okay, somebody want to enlighten me what PHK is? And now if I have to ask, what the heck is PHK? That's a big fat no. Sorry, it's a no. No options, no thank you. Okay, who said that? Tim Wallery. Okay, PHK has no options. I have no idea what we're looking at. Honey Bear, I already looked at AAP. 2 weeks or 2 trading weeks? See, it's funny you say that. Okay? Okay, look at the 26. The 26 is highlighted right here. Okay? 1 week, 2 weeks on a Monday. Okay? It's actually that simple. You take a look at the calendar, Sunday through Saturday. Okay? The 26th is here. 1 week, 2 weeks on a Monday. Don't complicate things. All right? A week is a week. Okay? Week 1, week 2, week 3, week 4. Okay? Okay? This week here, this is 1 week here. Okay? 1 week, 2 weeks on a Monday. Don't make it more complicated. This was created for a 9-year-old. It's an MLP. What the heck is an MLP? Major League Player? MLP. Marty Pineapple. Are you kidding me? No dividends whatsoever. No. Long-term hold, Noble, N-O-B-L. N-O-B-L. Yeah, hell no. So let me ask you this for a question. Does NOBL pay more than 20 or 30% per year? Well, let's find out. NOBL. The summary for Noble. Oh, yeah. Now that's a deal and a half. Look at this. Noble, 2%. Why the hell are you investing your money at 2%? No, you don't really need to answer the question. If you think a 2% return is fine, you do what you want to do. 2% a year? Yeah, you have fun with that, dude. Sorry. GSK. What the heck is GSK? It boggles my mind what you people actually buy. GSK. Well, it has weekly options. Okay. Well, let's see how they are with their dividends. GSK. Historical data. Dividends only. Okay. I want to see all the dividends they pay out. Oh, take a look. GSK goes all the way back into the early 2000s, into the 1990s. Holy cow. Well, let's go from the 2000s. Okay, so this looks bad already. Okay, the user 29, 27, 40, 27, 59, 74. Okay, that's a big. Okay, anyway. August 2000, right? Let's check out these dividends. August 2000, 50 cents. She jumps up to 74. Okay, that's a nice jump. Increase. Okay, 29 cents. That is what? A 60% drop? Yeah, no thank you. Okay, 28, 28, 72, 56, 31, 47, 32, 29, 30, 52, 35, 37. 44, 38, 35, 36, 49, 39. Yeah, okay, come on, give me a break. You really think that's a good investment? Seriously. It goes up, it goes down. There's no consistency whatsoever. Okay, this is what I want to see. Let's go back to 2000 because this company goes 70 years. Did you hear that? 7 decades, 70 years of increased dividends. This company right here. Look at the numbers. 28, 29, 30, 31, 34, 37, 39, 40, 41, 45, 50, 54, 58, 62, 66, 68, 72, 76, 79, 82, 90, 95, $1. Consistently increasing year after year after year. Why the hell would you buy something that's not consistently profitable? Think about it. It's your money. Why are you investing your money in something that's not consistently profitable? It boggles my mind. It really does. And I don't do long term, okay? I do not buy something and wait for it to move. That doesn't make sense to me. All right? I'm not. However much money you think I have, I don't. I don't have the luxury of buying something and waiting for it to move. I invest for cash flow only. You don't buy an MLP for capital appreciation. No, I don't buy MLP because I don't like the numbers. AMD, we already looked at AMD, it's a no. Okay, Honey Badger, AAP, we already looked at that one. Do you usually sell a call far out of the money or the closest possible one and let it exercise? That's exactly what I do. I buy at the opening price on Monday morning. The closest strike price to my purchase price, 41.42, is going to be the 41.50. Okay, this particular GSK, well, it's a hell no, because that's 10 cents on a $40 stock. Yeah, no thanks. Manny, how are you today? Manny, I don't give stock tips. The only tip I can give you is don't stick your head out too far. It might go home in another car. That's the only tip I give out. Do you use TOS as a screener for consistent profitability? The Indie playlist. Okay, let me tell you where I get my stocks from. I don't use any screener whatsoever. Okay, I use somebody else's list. Let me explain to you. There is a list of stocks, and a lot of people, ooh, look at this, I got another heart, woohoo! Okay, you can get these lists anywhere. Okay, go to Google, put in the search bar, Dividend Kings List 2024. 54 companies that have consistently increased their dividends for more than 5 decades. Dividend Aristocrats List 2024. 67 companies that have consistently increased their dividends for 25 consecutive years. Dividend Champions. 150 companies that have increased their dividends for more than 25 consecutive years. They get a little different rules than the aristocrats, but still 25 years of increased dividends. And then you have the dividend contenders. Over 300 companies that have consistently increased their dividends for 10 to 24 years. And then just for the fun of it, let's throw in Warren Buffett's list, 2024. Those 5 lists right there should give you more than 300 companies that have consistently increased their dividends for more than 20 consecutive years. It's not that difficult. Stop making it more complicated than it needs to be. It is a simple trading strategy created for a 9-year-old. Okay, in 2018, my daughter was 9 years old. She wanted to learn a trade, so it had to be simple, safe, predictable, and consistent, and no way for her to lose. That's it. It is actually that simple. How can adults screw up something that was made for a grade school? Somebody who's in grade school. Simple, safe, predictable, consistent, no way to lose. Why complicate it? If it works, don't fix it. That's one of my biggest pet peeves, is something that works perfectly fine and then somebody has to go and try to make it better. They just end up messing it up and then we have to learn all over again. I loved Windows 95. It was awesome. Everything I wanted to do was in Windows 95. And then they went to Windows 96, Windows 97, Windows 98, and it's like, why mess up something that worked fine? Austin, how are you doing? All right, Tim Woolery. Ford, we'll take a look at that in a second. It's Mr. Duran wants to look at CLM. Even though I know CLM is a no, I don't want him to think that I'm ignoring him, but here you go. CLM, no options, no thank you. How do you get a weekly cash flow from a company that has no options at all? I'm not sitting in front of a computer looking for movement, looking for patterns. Yeah, no thank you. I want it simple, I want it safe, I want it predictable, consistent, in no way that I can lose. Why would I look at a company that doesn't have options? No. Right, now let's take a look at Ford. I liked Ford up until Friday. Okay, that being said, there's our high right there. Big drop. Look what happens. Down, up, down, up, down. I got it right here. Okay, I wanted it to go up, but no, she's pulling back. We'll see what happens. Okay, here's your last 30 days with Ford. Okay, 30 days go. Up, down, up. Now she's coming down. I do own Ford. I wanted to get out of it this morning because this morning she opened up higher than what I paid for it, and I tried to sell it this morning higher, but the market maker pulled it back this morning. Okay, market maker pulled it back. Now I didn't get out, so I still own it. Duran, ORC, no. CLM, no. ORC is a dividend trap. Thank you for that. Don't need that. Coach Joel, you think that's funny? Okay, Ivan. So dividend capture is just a bonus then, depending on where the stock is on the 30-day chart. Kinda yes, kinda no. Now, Ivan, as I recall, you are part of the morning trading group. Or at least I saw you in the email, or I saw it in Ivan. I don't know if that was you. I mean, how many Ivans can there really be? Okay, especially Ivans that are interested in what do you call it? Stock trading. All right, Coach Marvel, green light. I'm not quite sure what you mean by green light. I need you to elaborate on that one. Okay, let's keep on going. Tom Woolery. So how I would like your story. Okay, Duran. Okay. Coach Marvel. Excellent. T-U-O. T-S listo? I have no idea what that means. Let it exercise. You can see at the 1%, like the call, the money. Okay, cool beans. Coach Marvel. AR here too. Okay, blah, blah, blah. Creator. I bought my first contract today. Can't do a covered call for a few days, 3 or 4 days for deposit. I get it. I don't know why you bought a contract. I don't buy them, I sell them. Because look at it this way. 80% of all options expire worthless. So why would you buy an option if you have a 20% chance of making money? I prefer an 80% chance of making money. Okay, Marvel, I'm in a small town near Cave City. Kohl beans, I have no idea where that is. I like to, okay, all right. ITW, no. SHW, no. CVX. Now, I like CVX. Oh, Illinois Tool Works, monthly. The other one was a monthly, but Chevron is a weekly. We'll take a look at Chevron in a second. You explained how you were doing your list, and I was trying to understand what it was based on. Wow. Okay. I was doing the list, and you were trying to understand what it was based on. Okay, I'm going to repeat myself. All right, you ready? My list consists of companies that have consistently increased their dividends. A dividend is a portion of the profits the company makes that is allocated to the investors. So you're here, so I'm assuming you're interested in buying shares, stocks, certificates, whatever you want to call them. As soon as you buy 1 or 2 shares of stock, you are an owner of that company. You own a very small share of that company. Now, there's only 2 kinds of companies. Ones that share their profits through dividends, and the other one, they take all their profits and put it back into the company for capital growth. I have no desire whatsoever for capital growth. I'm 60 years old. I need cash flow. Okay, I'm not in a position to take a big chunk of my money, put it into something, and wait for it to grow. Nope, sorry, been there, done that. I have no desire to go back to work. I could if I wanted to, but I've been working since 1973. I've done a lot of jobs. The worst job I've ever had is shoveling horse shit. Okay, now, I kid you not. Seriously, I kid you not. In high school, me and my friend, we got a job on a farm from the 1700s. So we lived in the Massachusetts area. The people have been coming to Massachusetts since the 1600s. So this farm was built in the 1700s. Big barn. Now, usually, they have a wagon that goes under the barn and stops right there under the chute. So you can take the shit and just go right into the wagon, and then they can haul it off. There was so much shit in this. Literally over 4.5 feet of shit. It took us months. Get in there, shoveling the shit. That's the worst job I've ever had. Besides, yeah, working at the landfill. That was terrible too. All right, so let me think. You explained how you're doing your lists. I was trying to, what was it based on? Okay. All right, user 569397. Okay, the list is based on strictly on profitability. How consistently profitable are they? Okay, one company shares profits, one company's don't. Okay, there's 9,660 some odd different companies you can choose from. 4,500 pay dividends, 4,500 do not pay dividends. It is that simple. Are they consistently profitable? That is my major concern. When I say consistently profitable, I mean 20 years or more of consistency. Okay? That means year after year after year after year, 20 times, okay? Higher and higher dividends every single year. That's what I'm looking for. Tom Powell, good night. Good. Pen and paper, old school, I like it. Yeah, Ivan, thank you. Too many times I've lost paperwork, lost information on the online. Okay, blum blum, blum blum blum. Creator, hi James. Poseidon's last molar, how are you doing today? Charles. Advanced Auto Parts is not in the Dividend Kings list. I never said that it was. I also said Advanced Auto Parts was not a buy for this week for me. AAP. If you look very closely, okay, if you look very closely, Charles, 30 days ago was a 30-day high. 2 weeks ago is the 30-day bottom, okay? She went back up, and 3 days ago, she starts coming back down. Yeah, I did not say Advanced Auto Parts was a buy, and I don't give recommendations. Club Med Tom, dude, nice to see you back again. Hey, James. So when you buy a covered call, do you adjust the strike price after buying it? After the first week, maybe yes. Stevie Ray, AGNC. AGNC. No. Reason why? Look at where it is. Okay, here's the high. 2 days is a lot more profit taking to be taken into consideration, and more than likely, okay, it would be ready maybe next week or the week after. And I actually have AGNC written down for next week. Nope, that's AVGO. AVGO. Here's AGNC in 2 weeks. Okay, so it is written down. Amy. Hey, James, can you please give a sum of your sub differences websites? What if we are busy daytime? Oh, if you're busy during the day. Well, what I always tell people, if you're busy during the day at 9:30 in the morning, you need about 15 minutes, 15, 20 minutes. Sometimes a little bit longer, but usually 15 to 20 minutes to take a look at what we trade in the morning. Okay? Now, what I tell people usually, you just tell your boss, say, hey, I'm taking my coffee break at 9:30, and I won't be available until about 10. That's what I say. But all of the morning trading calls are recorded, and they are in the membership area, if that's what you're looking for. I mean, and watch videos on demand and can't be on your live during office hours. Yeah, well, they're all available. Okay. Come on, I don't want that. Okay, they're all available. Okay. Okay, here's 924, here's 923, there's 920, 918, 919, they're all there. Okay. Okay, 912, September 12th, September 11th, September 10th. Okay, they're all there. Okay, let's keep on going. What calendar are you using? All right, TC Hester. The calendar that I'm using is right there on Thinkorswim. Okay? You come up to the Market Watch, quotes, alerts, visualize, finance rates, calendar. It's right there. Everything I can possibly need when I'm trading or anything to do with money is available on Thinkorswim. I just use a very small amount. All right, sent a warm heart. That was nice of you. Natas, MPS. Okay, Charles, why? Charles, why do you buy a strike price that's closest to the current price? Why buy on Monday? All right, Charles, a few things. 86, what's happening, dude? All right, Charles, let's get a few things straight. Now, for beginners, most beginners lose money or fail by the wrong use of the words or hitting the wrong numbers. Now, when you're saying, why do you buy at the strike price? I don't. I buy the stock at the opening price of the day. Then I turn around and I sell. You gotta get the terminology right, because if you say buy when you mean sell, you're gonna lose money. Okay? It's very important to get the terminology correct. If you're buying, you're buying. If you're selling, you're selling. I don't buy options, I sell options. Okay, so why buy at the strike price? I don't buy at the strike price, I sell at the strike price. So let's find an example. Okay, so here's the example. Are you ready? I buy at the stock price. Okay, the stock price right here. The last trade or the close of the day, the bid, the ask, the volume, the open, the high, the low. Okay, that's all stock information right up there. Okay, as a matter of fact, this might be a little easier. See that? That's the stock information. Okay, last traded price, the change, the bid, the ask, the size, the volume, the open, the high, the low. Okay, the other numbers are the option chain. Okay, these just so happen to be weeklies. 27th September, that's this Friday. For October, that's next Friday. So on and so forth every Friday. Now, I buy the stock on a Monday. Okay, JCI has its dividend on the 25th of September. I buy the stock 2 weeks before the EX date on a Monday. I sell the option that expires on Friday. I sell it on Monday. So I have 1, 2, 3, 4, 5 days of time value. Okay, so let's take time value. Say it's $10. On Monday, I have 5 days, which is $10. Tuesday, I have 4 days of time value. So now I'm at $8. Wednesday, I have 3 days of time value. So that's $6. Thursday, I have 2 days of value, and that's $4. And then Friday, it's worth $2. So the reason why I sell it on Monday is because I have the highest value of time from Monday to Friday. You look at it night also too. Yes, I do. I look in the morning with my trading group. Okay, we have a bunch of traders. We jump on the morning, okay, at 9 a.m. Okay, if you're interested at 9 a.m., well, we have a morning trading call. It's about $100 a month. And you get to watch every trade I make, and you get to ask me as many questions as you want for 22 solid days. Okay? There's 22 days, 22 trading days on average in a month. So you get to ask me any question you want for 22 trading days. See if I can do the math on that one. That's about $5 a day. Is that about right? No. I don't know. Anyway, besides the point. All right. I'm live every night. You're right. Natas, I need you to call me tonight as to what I emailed you last night. Okay. Well, DM me your number. Go to the top left-hand corner, right in the TikTok where it says right there, my name right there, my picture, Dividend Stock Talk. Click on that. That'll take you right to my email or to my text messages or my DM, whatever you want to call that. Best dividend stocks. I would say Macy's this year. Yes, it's me, Cool Beans. Natas. Uh-oh. Natas. It means next time he sees you, he's going to beat you up. Green light. I have no idea what that means. It means the next time he sees you, he sees RU, he's going to beat you. I have no idea why that is. I have no idea who that is. Okay. This is a strategy you use in your paid group, or do you use a different strategy? This is a good question. Okay. Now, this trading strategy here is the main focus because it's simple, it's safe, it's predictable, it's consistent. Now, most people in the trading group are new. Now, there are some advanced traders in the trading group, and yeah, when they ask, we take a look at more complex, more profitable, more higher rates of return trading strategies. But I always tell people to focus on this one first. Once you perfect this one first and you get your 50% per year, well, great. Then we will look at more complicated, more higher rates of return trading strategies. But until then, it doesn't make any sense. And yeah, on the morning trading group, we do look at different trading strategies. Any new strategies in your trading group? Yep. SES. SES. I have no idea what that means. SES is a penny stock with no dividends. Yeah, no. Thank you. Thank you, 86. I don't even want to bother with it. Okay, Nate. Natas. So basically, if you see a company that only has 15 years of increased dividends, not necessarily so. Okay, I do make exceptions for some companies. For Apple, for instance, it's not on my list. The only reason I trade Apple is because it's on Warren Buffett's list. Okay, Marvel, that wasn't on my list. It was on Warren Buffett's list. Paramount wasn't on my list. It was on Warren Buffett's list. So if it's good enough for Warren Buffett, then yeah, I'll take a look at it. So what about it? T. All right, we already looked at AT&T earlier, and it's a no only because it's a little too high. Okay? Do you see where AT&T is at the moment? Oh, that sounds terrible. Okay. So, Harry McCoy, AT&T. Now, I said no to AT&T earlier, but you're new here, so I'll let it's going to slide for a little bit. A year ago, here's where we were, 14 bucks. Now we're at 22. Yeah, I don't buy at the high. I don't play that game. Okay? I will wait 2 or 3 weeks for it to come down and have that profit taken down and over with before I'll take a look at it. Sent ICU. No pause. Thank you. Money guns up to you. Dividend stocks. Thank you. Thank you for that, Natas. Thank you, thank you. All these kind of nice, neat stuff he's sending me. That's very nice of you. Head dim right D last night. A head dim red D last night. I have no idea what that means. I have no idea what that means either. All right. Dividends. Talk. Dude, you really got a set of balls to come here and poach people. Really, you do. It's weird. So now when I say, there's 27 imposters pretending to be me, here's one right here, actually on my own private live show. He has the balls to show up and telling Madisha to chat with him. Okay, I find that rather interesting. Because look at the way he spelled it. Okay, he adds an S between the N and the D in Dividend Stock Talk. Well, and look at this, he's got 19,000 followers. Well, good for him. Anyway, yeah, guys, be careful. He's right here. Molly said there's 27 imposters right there on the screen. This dude right here. Okay? You got a set of balls there, dude. Oh, here we go. You got a set of balls there, dude, showing up here. Anyway, it is what it is. You can't. They won't do anything about it. TikTok will not do anything about scammers. It won't. All right. Basically, yep. Let's keep on going. What else we got? What else we got? What else we got? Hi there, Adam Devine. How are you today? What time do you normally start your live? 9 p.m. So buy a stock, sell the option. Yep. Hope the stock price is greater than the strike price by Friday. Exactly, Charles. The term green light is what someone said to you if you didn't know what it was. I was explaining. Okay. What is the list of stocks you bought today? That's an interesting question. Natas, I highly doubt that is what he meant by green light, but it was, however, the main meaning that I know. Okay. Mara, how are you? Hi, can we find your list online? Yes, you can. Sin, so AT&T, if I bought it low and then it goes high, it's good to sell. Now, I can't tell you, Sin, when to sell or when to buy. But if you look at the chart, this is the chart for AT&T for the year. Okay? A year ago, it was at 14 bucks. Well, now it's at 21.50. Okay, where you buy, where you sell is totally up to you. So blah, 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 blah. I can't do anything at all about scammers. I can't. TikTok will not do anything about people pretending to be me. You got a friend request from someone that had your photo, but thought it couldn't be you if you are live. Sin, you're absolutely correct. Okay? That's why I always tell people, if you really want to talk to me, send me your number and I will give you a call. Simple as that. This is why I need you to call me. Well, if you send me your phone number, I will call you in about 15 minutes. Okay, because we're just about done here tonight. Okay, it is 11:20, so we got 11 minutes left, and apparently you guys are done with the stocks you want me to take a look at. So now I get to share with you my stock list. Okay? Now, this is the list that I've collected over the last 2 weeks that's going to look good. So, first and foremost, let's take a look at Cisco, CSCO. Because we said 2 weeks ago it was a no, but what does it look like today? Again, another no. So 2 weeks ago it was here. No, yeah, it was here at the high. So it went down and went back up again. So Cisco, no thank you. All right, Clorox, CLX. Still hanging out to high. So we'll put CLX and Cisco for another 2 weeks. CLX and CSCO. Okay, Baxter. Ooh, haven't taken a look at Baxter for a while. BAX. Check it out. That's what we're waiting for on Baxter. Okay, to find its bottom, turn around, go back up. So one more day on Baxter. Hey, James, what is the coin you're trading now? Okay, dude, I don't do cryptocurrency at all. I don't know where you got that idea. Sorry. All right, so last 30 days. Here we go. This is what we were waiting for. Got it? Okay, 2 weeks ago was here, so she went up a little bit more, then she came down. Here's where we are at 39. Okay, 30 days ago we're at 37, sideways for a bit. Here's your 30-day high. She pulled back. Now she's going to the upside. Is it do James Bond? Yeah, alrighty, whatever. Pay attention to you guys when you have silliness like that. Currently 39.74. The closest one's going to be the 40. The 40's going for 5 cents. Yep, no thank you. We're waiting for Baxter. Well, there it was. Didn't look very good. Philip Morris. Look at that. Philip Morris did the same thing we wanted to. 2 days the upside. See that? 30 days ago, where are we? Right there. Okay, look at this. 30 days ago, here we are at 119. Shoots up to 128. Okay, drops down. Here's a bottom here. 1 day, 2 days to the upside. That's exactly what we're looking for. Okay, 30-day bottom, 30-day high, new 30-day bottom, and bouncing to the upside. This is Philip Morris. Now, some people a little bit queasy about Philip Morris, but hey, it's a company. It's consistently profitable. So let's take a look at the numbers. Currently 121.09. The 122s are going for 35 cents. Yeah, no thank you. Sorry. Philip Morris is about 100 years old, but not quite there. PNC. PNC. That's going to be a no. Okay, we'll move that for a couple of weeks. PNC. And Philip Morris. No, Philip Morris is a no because the premiums were terrible. Okay, Southwest Airlines. LUV. Damn it. Okay, here's where we are now. 2 weeks ago, we were here. She dropped. We should have jumped in last week. So we were off by a week. So we missed the Southwest Airlines trade. So we're waiting for another 2 weeks for LUV. And it's on my list for 2 weeks. All right, so we'll take a look at it in 2 weeks. I like Philip Morris at 70 or 80. Yeah, well, me too. But we have to wait for it to get back down there. Gap, we looked at Exxon Mobil. XOM. How did we miss this one? Okay, 30 days ago, here's our high. We dropped down. Now, we missed it. We should have jumped in last week. Damn it. Missed it. Damn, missed that one. So we'll put ExxonMobil for next week. XOM. Next on the list, Halliburton. We looked at that one. APA. APA, Apache. Okay. I like this one. Okay, here's our last 30 days. Apache, 29. 29.50 is our 30-day high. We dropped down a week ago, or 2 weeks ago. 1, 2, 3, 4, 5, 6, 7 days to the upside. Now we should have jumped in this last week. Damn it. APA. All right, we'll look at it again in a week. But let's take a look at the numbers. 25.44. The 25.50s are going for 35 cents. That's over 1%. That's what we're looking for. Let's take a look at Apache. Let's go all the way back to the beginning. Okay, a year ago, we opened up at 40.36. We topped out at 43.72. See, 43.72 is the high. She drops, retrace, drops, retrace, drops, retrace, drops, retrace, drops, retrace, drops, retrace, drops, retrace. Okay, see right now we're going to the upside. Okay. Hey, here's your last 30 days. This is what we're looking for. 30-day high, 30-day bottom. Now she's going up. That's Apache. If you like Apache, that's the biggest concern. Have I heard of the company? Do I know what they do? Are they consistently profitable? And do the numbers work? Well, the numbers work. Is it the right time? Well, here's the high, here's the low. Now she's on the way to the upside. I'm only looking for 1%. So it's just going to stay where it is or go up just a tiny bit. Can it do that by Friday? Do you only buy on Mondays? No. Once in a while I buy on Tuesdays. And every once in a while, very, very rarely will I get, hold on. Show us the FAFO. What the heck is FAFO chart? FAFO. I have no idea what FAFO chart is. Sorry. No. Every once in a while, I will collect dividends and I'll look at my account and say, whoa, where the hell did that money come from? Because sometimes I lose track of what's coming in. Because when you're trading 6 different accounts, well, you don't always know where everything is going or where everything's coming from. But for the most part, I'd say 90% of all my buying on a Monday. Because I want to be an option seller. 80% of all options expire worthless. 80%. Why would I want to be on the 20% side? Ooh, Brian wants to take a look at Marathon. So let's take a gander at Marathon. M-A-R-A. Okay, first thing I always want to see, the high, the low, where was it, where is it, what direction it's going. This thing's like trading sideways for the last few months. The current number or the current price is 1604. The 16s are going for 59 cents. Now, if you do your math, we all know that 59 cents is more than 1% of a $16 stock. Okay, Gamer, we'll take a look at Macy's in a minute. Sit tight. So, at 1604, now here's an interesting thing that some of you may or may not know. Okay? Before I share that with you, let's take a look at this. Okay, look at Marathon. 30 days ago was the 30-day high. Okay, she drops down, here's your 30-day bottom. She comes up, now she's going sideways. She's channeling sideways. Current price, 1607. The last trade, 1607. The bid, 1603. The ask, 1604. That right there, the bid and the ask are both lower than the last traded price. That gives us a hint that the market maker is getting ready to push it down. Okay, so would I buy it now? Not with the market maker pushing it down, I don't want to. Okay, because here's the high, here's the low. She already went up. Well, now she's probably going to come back down again. Trevor, yo, what's up? All right, last one we're going to take a look at, Macy's. Macy's is going to be the last one, and then we're going to call it a day. Macy's, been in business for over 100 years. They used to be a dividend king. What's this stream about? Trevor, this stream is about a investing strategy that is safe, simple, predictable, and consistent. 1% per week. That's over 50% per year. It was created for a 9-year-old. Simple, safe, predictable, consistent, no way to lose. Okay? 5 rules. Never buy something you don't understand. Never sell at a loss. Make sure the company is profitable with weekly options, and then double check the numbers to make sure everything is right with the numbers and the timing is right with the charts. Adam, what all are you live on? I have no idea. Can you say that in another way in which it would make more sense to me? What all are you live on? That makes no sense. I'm live on 5 different channels, if that makes sense to you. Trevor, can you give me advice? I caught my uncle. Wow. That I don't want to give advice on. He means, what platform are you in? Oh, this is Think or Swim. Okay, it is owned by Charles Schwab. What platform or channel are you live on? Trevor, because that's inappropriate for me to answer that question. Okay, it has nothing to do with dividend investing whatsoever. Sorry, dude. Okay, I know nothing at all about you. I can't give you advice on something like that. No, like what platforms are you streaming video on? Oh, well, there's TikTok, 2 TikTok channels, 2 YouTube channels, 1 Instagram, and 1 Facebook. Have you ever been expelled from school before? I've been expelled 15 times and got parent summons once. All right, Trevor, I hate to be the bearer of bad news, but depending on which state you live in, right? My son at a certain age thought it would be fun, funny, interesting to skip school. At some point in time, they have what's called a truancy officer. Okay? So we told our son, you do it again, there's nothing we can do. So he thought it would be fun and funny to do it again. The state came in, took his skinny little ass, and brought him to a group home for a couple of months. Well, in the group home for a couple of months, he changed his attitude pretty damn quick. Because as much as your parents want to do what's right for you, and you want to be a smart ass and think it's fun to skip, hey, more power to you. You are creating your life as you speak. So when you are older and you have children, how are you going to explain to them when they skip school? And you're probably thinking to yourself, my son ain't going to skip school. Well, if you're doing it, dude, he's going to follow your lead. Okay, definitely not on the topic, and that's why I don't talk about this. Not on the topic. Oh. Okay. They sent my dad to jail for the weekend. I've never been to jail. I've been arrested a few times, but I've never been to jail. Okay, they arrest you and they, send you through processing, take your picture and all that crap, and then they just send your ass home. I just got onto Thinkorswim today. Thanks for that. For me missing school, that is. Yeah. Okay, now, was that right for you to put your dad into that position? Okay. Your actions caused your dad to be thrown in jail. How does that make you feel? Okay. Now, I'm sure at that age, you probably thought it was fun or cool to skip school. Why are we on this topic? Anyway, yeah, thank you, Brian. Let's stay on track. All right, so basically, sorry about that, Brian. We're 11:30. That means it's time to go. Evergreen 211, dude, you just got here. I'm just signing off. I'm here live from 9 p.m. until 11:30. It's 11:33, past the time. Stella, I'm just signing off, done. So, finish Macy's. Let's finish Macy's. Hold on a second. Okay, so Macy's. Here we go. Sorry, got a little distracted. People ask me weird questions. Here's the high. Here's the low. Here's where it was. Here's where it is. Here's the current direction in which it is going. It is currently now at 15.15. I remember back in January they had offers to buy Macy's and take it private at $24 a share. Macy's said no. All right, let's see what it looks like. Now, Macy's is one of my favorite companies, consistently buying it. Now, a year ago, we were at 10.96. We bottomed out at 10.38. That's the low of the year. Way over here, 10.38. Okay, she shoots up. Here's our high right there. The high is actually 22.08. Okay, 22.08. From there, she drops and drops and drops the last 30 days. Right here. Here's our last 30 days for Macy's. 30 days ago was the 30-day high. She drops. Here's your 30-day low. See, she jumped up 15.60. That's a new high. Not a 30-day high, but a new high. Now she's pulling back. Sorry. Macy's, even though I like it and I do own some at the moment, I would not jump in again until this thing comes down further, finds a new bottom, turns around, goes back up again. That's it. Okay, for tonight, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. We'll catch you guys again tomorrow.